evolution of the payments system. It means that how money has evolved. So the payment system is basically the method of conducting transactions in the economy. And you know that the payment system has been evolving over centuries, and with it the form of money. For example, at one point, precious metals such as gold were used as the principal means of payment, and were the main form of money. It means that in the primitive society, people used gold or silver for transaction purposes. So there are different payment systems that have been evolved until now. Number one, commodity money. Actually, commodity money made up of precious metals or another valuable commodity is called commodity money. And from ancient times until several hundred years ago, commodity money functioned as a medium of exchange. So, in the most primitive societies, people had used commodity money for transaction purposes. For example, precious metals, cigarettes, and so on. This is the shortcoming of commodity money, heavy and uneasy to transport from one place to another. It is very heavy in weight, and it is very uneasy to transport your money from one place to another. Okay, the second payment system is known as fiat money. Actually, the paper money decreed by governments as legal tender, meaning that legally it must be accepted and payment for debts. There is a legal acceptance to this money. Legally, it must be accepted as payment for debts, but not convertible into coins or precious metals. Paper currency has the advantage of being much lighter than coins and precious metals. It is a lighter currency than coins, and it can be accepted as a medium of exchange only if there is some trust in the authorities who issue it, and a printing has reached a sufficiently advanced stage, but counterfeiting it extremely difficult. The major drawbacks of paper currency and coins are that they are easily stolen and can be expensive to transport in large amounts because of their bulk. Now, the third important payment system is known as checks. Basically, a check is an instruction from you to your bank to transfer money from your account to someone else's account when she deposits the check. So, checks allow transaction to take place without the need to carry around large amount of currency. The introduction of checks was a major innovation that improved the efficiency of the payment system. With checks, payments that cancel each other can be settled by canceling the checks and no currency need to be moved. The use of checks reduces the transportation costs associated with the payment system and improves economic efficiency. Another advantage of checks is that they can be written from any amount up to the balance in the account, making transaction for large amount much easier. The third and most important advantage of checks is that it loss from theft is greatly reduced. The next important payment system is known as electronic payment. Electronic payment is the further evolution in the money system. As you know that the development of inexpensive computers and the spread of the internet make it cheap to pay bills electronically. You know that people are paying their electricity bills with the help of computers or with the help of machines or with the help of internet. So you can pay your bill online. This is known as electronic payment. In the past, you had to pay your bills by making a check, but now banks provide a website in which you just log on, make a few clicks, and thereby transmit your payment electronically. Not only do you save the cost of the stamp, but paying bills become a pleasure, requiring little effort. Basically, the electronic payment is becoming far more common in the United States, but Americans lag considerably behind Europeans. And the final form is known as e-money. E-money means electronic money. Actually, electronic payments technology can not only substitute for checks but can substitute for cash in the form of electronic money. Actually, electronic money is that money which exists only in electronic form. For example, the first form of e-money was the debit card. Debit cards, which look like credit cards, enable consumers to purchase goods and services by electronically transferring funds directly from their bank accounts to merchant account. A more advanced form of e-money is the stored value card, which is known as smart card. And the third form of electronic money is known as e-cash, which is used on the internet to purchase goods and services. So these are three forms of e-money.